I'm Rob Booker, and it's Wednesday, December 2nd, 2009, and this is the weekly FX Street webinar, and I am totally excited to be here with you, looking forward to spending a few moments together. I want to bring up my daily chart for my dollar yen to start us off. I want to welcome all those of you that are here. I'm sure that maybe one of you is here for the first time. Other than that, everybody's brand new. Let's see if I can get this to work correctly. I'm just going to try to bring up this and this only. There we go. All right, you should be able to see my chart. This is the dollar yen daily chart. I've been looking at this for days. I am actually in a buy trade on the dollar yen right now. I've been in a buy trade on the dollar yen for quite some time. A few days at least, which I now consider quite some time, and I am totally ready to be out of I'm totally ready to be out of this position. And in getting ready for today's webinar, I had a few ideas and actually started to consider staying in my buy trade for a longer period of time than I initially had suspected that I would. I very much enjoyed, by the way, listening to Ed Ponzi's comments about the Euro Swiss and about intervention. That was absolutely fantastic, and I hope everybody here got a chance to listen to that. I don't know if it was recorded today, but that's the kind of stuff that you only get from Ed Ponzi and you only get at FX Street. On the daily chart of the dollar yen, there's a few things that I'm looking at right off the top of my head, and I want to tell you a few of these things. I'm not a real huge candlestick person in the sense that I don't obsess about them, but, you know, my friend Steve Nissen, I don't think he obsesses about them either, actually. I think he just simply uses them as a guidepost. And this is one of those instances and times when I think it might be worth using candlesticks at least some type of a guidepost. And what I'm focusing on is this area right in here. That's the worst possible color that I could ever get for this, but I'm going to change it right now. Okay, there's this area right in here where we got a doji or a homoji or whatever you want to call it, pregnant fairy, whatever it is. It's a pretty darn good reversal candle where the daily candle just smacked down below 85 all the way down to like 84.70 and just stopped dead cold. Let's see what the low on this candle was. 84.80 was the low, and then it rocketed back up and it corrected itself. It ran out of sellers or whatever you want to say. It was a bargain down at that level. And the currency pair has been trending so far for so long that it's not a surprise that this occurred. It got me thinking simultaneously while I was looking at the 15-minute chart. It got me thinking that, you know, now might be the time to get my feet wet in a buy trade. Now, I'm a counter trend trader, so that's a natural thing for me to do. And we'll look at the 15-minute chart and discuss in a little bit more detail why I was interested in the trade. But this daily candle was sort of an early warning sign, even earlier than I was ready to take the trade, that something might be interesting and something might be worth taking a look at. If we switch over to the 15-minute chart on the currency pair, we've got the blue 200 simple moving average, the black dashed 800 simple moving average. We've got a trend line right over here that I'm not thrilled about, but we will talk about in a moment. What I did was focus once again on how long the currency pair had stayed away from the 800 simple moving average. That's the Boscillator mentality. The Boscillator is an indicator and an oscillator that I built that measures simply the length of time that a currency pair spends away from its 800 simple moving average. Anything over 500 candles starts to be eccentric, an anomaly, and something that deserves to be looked at. And in this instance here, the US dollar Japanese yen at that point had been away from the 800 simple moving average for 1,000 candles. That's way over. That's 500 more than what usually makes me turn my head, take notice, and want to trade. And in this instance, it had been 1,000. So when the currency pair had reached 1,000, I was ready to take the trade, and I bought. I bought in at about 87 even 87.10, and then the trade went away from me, went back in my favor. Now it's profitable, then it wasn't, went back and forth. And what I'm really waiting for is for it to at least get up to the 800 simple moving average. That's at least where I want this currency pair to get to in my trade. So I'm long the dollar yen right now, and I have been, and I will continue to be. And this trade may be over during the period of time that we're actually here meeting together, which would be fascinating. Let me go back to the daily chart and describe a little bit about what my mentality and thinking has been over the course of the last hour or so as I did some preparation to join you in the webinar today. On the daily chart here, I drew a trend line across the tops of the currency, of just the recent highs on the daily chart. Now my MetaTrader charts were just blowing up into pieces, but we'll get that resolved. Lawn green, that is a very beautiful color. Lime, let's go lime. Let's get a good thick trend line here. And those are the recent highs that I think could be retested since the currency pair has jumped back up, so to speak. And there you have it. You can see a little bit closer up now that this line terminates at about 89. And the currency pair is jumping back upwards. And I would love to see the currency pair retest that 89 level, come back up and test that. That wouldn't necessarily interfere with the downtrend. It would continue at that point to make lower highs. And then it could just turn around and it would be the next sort of pivot level and turnaround level for a move downwards. What I also wanted to look at simultaneously in our work here this morning together is what would a fib retracement look like of this move for those of you that are interested in fibs. And what it turns out to be is that right around that level or just above that level is the 38% retracement of the move from 97.95 or so all the way down to 84.80. And that would be a turnaround point as well for those of you that are focused on or interested in fib levels. That would be an interesting place for the currency pair to turn around also. I just deleted my trend line, but I'm going to get it right back. There you go. So I'm thinking of a retest of that level. I want to go down to the 4-hour chart just briefly and share some things. On the 4-hour chart, it seems like that trend line level lines up fairly nicely, although not perfectly, with the 200 simple moving average. That's chocolatey trend line goodness, right? If a trend line is going to match up with moving average or something, that's just absolutely brilliant and yummy and tasty. And I love that. And you should love it too, with all your heart. Have a nice day at school. Yep, chart school. Chart school rocks. Yeah, that jacket is the shiz. It's beast. Looks great on you. All right. This 1-hour dollar yen chart makes me think of the first time I kissed a girl, which was like March of this year. It makes me happy because look, the trend line that we drew for our daily chart, which was our profit target, also lines up quite nicely with the 800 simple moving average. And don't you love it when a moving average lines up with a trend line, which is what we just finished saying, and which I'm not going to waste your time talking about any further. I think it's brilliant and lovely. It's loverly. It's just awesome. And so what I started to think this morning was, despite the fact that the 800 simple moving average on the 15-minute chart is my profit target, I'm starting to think that I ought to stay in the trade longer, or at least let it ride up to this trend line and retest this area that I've been talking about for the last few minutes. We've got this, fairly strong reversal. We've got a nice opportunity to get up to the 200 simple moving average on the 1 hour or the 800 simple moving average on the 15-minute chart. There's no reason why 85 or so could not have been a temporary floor on the currency pair for at least the next week or so. That's not a big deal. And this trend line that we've drawn matches up with the 800 simple moving average on the 1 hour, which is one of my favorite things in the whole world, and the 200 simple moving average on the 4-hour, and I'm kind of interested in now considering whether the dollar yen has more to go or more to give. And if it does, can I be a part of that? I know at least initially, I'm very happy to have my profit target at the 800 simple moving average. That's Bosslater trading at its most original and most traditional, where the 800 simple moving average is the profit target. There are strategies and tips and tricks and reasons that it can go even further than that. And when a currency pair blows through the 800 simple moving average, like the candle that it creates that hits the 800 goes through the 800, that's always a reasonably good thing. Chris mentions that the Euro-Yen 30-minute looks good too, so I'm planning on looking at that next. Chris is my super awesome good friend, and Chris will actually be joining me in Scottsdale, Arizona at the beginning of January, and we'll be talking about Bosslater trading for a whole day, and it's going to be freaking awesome. Chris is just awesome. I can't wait to look at the 30-minute Euro-Yen. Are we ready to move on to the 30-minute Euro-Yen? You know I'm long dollar yen. I'm going to continue to be long dollar yen. I'm happy to be long dollar yen. I want to get up to the 800 simple moving average. Excuse me. Sorry, I just woke up. You know, it's early here. Might not be early in Europe, but it's early in California. Anyway, you know where my profit target is on the dollar yen. You know where I want to go. You know. Okay, let's go to the Euro-Yen. The Euro-Yen is my next one, and it's the 30-minute chart. Am I tired? Heck yeah. Yeah. Out partying all night, Jez. You kept me out all night, man. You should be embarrassed. You should be ashamed of yourself. It is an interesting webinar, though. Dude, you guys are so awesome. I love you people. I absolutely positively love everyone who ever visits an FX Street webinar. Oh, and I got some shiz, awesome beast stuff to take a look at today. Hold the phone. I'm just writing down some notes. Just give me a second to write these notes. I don't want to forget. Okay, great. I'm not going to forget now. All right. This is the Euro-Yen 30-minute chart. It has been away from the 800 simple moving average for 711 bars. More bars in more places. That's a long time. That's longer than normal. That's too long. Chris was long at 130.67. We're trading at 131.60. So Chris is up about 100 points right now. And that's a fairly, we're getting into the fairly common range for a profit target on the 30-minute Bosslater. Chris, it is the 30-minute that you really like with this methodology, right? And I love that we have different time frames that we really enjoy looking at. I'm a big 1-minute chart kind of guy on this method. All right, Amy, you want to get up here? You want to do the webinar together? You can jump up on the chair and do the webinar together. My dog just. All right. The Euro-Yen 30-minute chart. It's too late to have gone back in time and gotten in this trade at 130.67. However, I want to offer this. Yeah, Chris, I'm in. We'll look at the euro dollar in just a moment too. If you're not in this trade yet, this Euro-Yen, there is a chance, and I think it's a pretty good one, that if we go above 131.99, so 132 even, we're going to very easily get up to the 800 simple moving average, which is 50 points higher. And if you have any interest whatsoever in taking this trade along with us, I am totally happy and completely willing to put that trade in myself. Here, I'm just writing it down. Now, trading is risky, and you got to remember that if you're inexperienced or don't have experience with this particular system or whatever else, you want to be careful about following anything along. And I think that I'm definitely supposed to say that I'm not giving any trade advice or recommendation, but I'm going to tell you what I'm doing myself and what Chris is doing, and it's just the honest to goodness truth that this is what we're doing right now, and this is where we're at. Euro yen 132 entry, 132.03 or something that gets it above the round number, and then target 132.50 at the 800 simple moving average. So that seems like a completely reasonable profit target, completely reasonable trade. You might not have gotten in way back when it was 500 bars away, but certainly you have a chance to get in now. Chris, I can see exactly where you got in. That is just a totally brilliant trade. All right, I'm going to look at the euro dollar now. Okay, the euro dollar is going to take a minute to load. There's just no way that gap is reasonable, correct, people? So that's just the currency pair like dorking around and not loading all the information here. Yeah, that's really weird. There's no gap on your charts, is there, people? That's bizarre. I hate it when that happens, don't you? So Chris has been long the euro dollar on a 1-minute oscillator trade for 3 days. So apparently, whatever, you're in a 1 minute, it's probably a short trade actually now that I look at it. So it looks like sold the currency pair maybe and is waiting for it to come. I don't know. Chris, short, yeah. I'd rather be short the euro than long the euro right now. I'm definitely interested in that. There was not a gap, was there? Yeah, Chris is only down 9 pips now. That's hilarious. Well, let's look at the euro dollar from a longer term perspective here. Out on the daily chart here, no gap there, so it's just my stupid charts here. Okay. There's the daily chart, and there's a green baseline on the daily chart. I don't love that green baseline, so I'm going to bring this whole thing up here. And I'm going to shorten up the line here. There we go. All right, this is the daily chart for the euro dollar now. And Boyke, why am I a counter trend trader? Just am. That's what I do best at. You find out what you do best at, and then you kind of do it. I don't know. I just hate trend trading. Like, I hate it. Like, it makes me ill. Like, I think trend trading is the thought that trend trading is easier or better than counter trend trading. That whole turtle shit. I think that's just a big myth. Sorry, but I think it's just a big myth. I don't think that it's better to trend trade than counter trend trade. I think it's better to do what you're more successful at than what you suck at. And if you suck at trend trading, you should stop doing something you suck at. Well, welcome, Max. It's nice to have you here. Okay. The euro dollar, Boyke, you're awesome. Thanks, man. I appreciate it. I think that when the euro dollar falls, and it will fall, even in the midst of a huge uptrend, it does fall. It retests lows and so forth like that. This daily trend line is my favoritist thing that it could possibly retest. You could see that doesn't line up perfectly well with the 200 simple moving average on the 4-hour chart, but it's nearby. I mean, we're only asking for it to retest the 4,900 area, which is completely reasonable. Go to the 1-hour chart. Trend line is below the 800 simple moving average. And you start to get a sense on the 1-hour chart for the fact that the currency pair is starting to consolidate here. It is starting to just go sideways. Let's see if I can. It's been a long time since we played music in the webinar. Do you notice that? I can't ever get MetaTrader to do anything that I want it to do. Do you notice that? This program is just, it's impossible. Objects. Objects list. Rectangle. Edit. Okay, let's get a better color here. Okay, that is just equally ridiculous. Is that going to work? That doesn't even do anything. What a waste of time. Rectangle. There we go. Now you can see it a little better. Here we go. So I think that it's consolidating in this range right here. And if the euro dollar can fall below the bottom of this range, below 50.60, then I'm absolutely thrilled about starting to trade this downward. A sell at 50.45, sell at below 5,000 at 49.90, and then try to get all the way down to 4,900 even and meet that trend line down there at the bottom. On the 5-minute chart, you can see that the currency pair is trying to consolidate near the 800 simple moving average, and that's a really good sign of an impending breakout. And Chris has got a comment about these breaks being a close below the 62 exponential moving average too, which is sort of a definite plus when we're looking at the boss later trades. So that's the euro dollar. I do like a sell trade. I am more bearish than I am bullish. Let me just say sell for me, not for you. Sell below 1.5050. Target 1.4900. That sounds pretty awesome. Okay, so far we've looked at the euro yen, we've looked at the euro dollar, and we looked at the dollar yen. If you don't mind, I'm going to go back to the dollar yen real quick and just take a look at it. Ed and Radha, those are interesting questions about gold and the S&P 500. I'll be doing some work on those today, and if you visit robbooker.com/postcards, you'll get more information about that. I won't have time in the webinar today here necessarily, but definitely it's all free. I'm not asking for any money. I'm not charging for any of this. I'm just saying that I'm gonna do some studies on gold and the S&P 500, and the website is and maybe I could do a special webinar together with FX Street sometime in the future about those things as well. Okay. That's not the most important point. The most important point is that somebody wants to look at the pound dollar. So let's look at the pound dollar. Let's do that. Makes me happy to look at something that you all want to look at. Okay. It's consolidating around the 800 simple moving average. The problem is that the 800 simple moving average on the 1 hour is sloping upwards pretty significantly, and that it needs to even out a bit. And what's happening right now is that the 200 simple moving average is coming down to meet it, and we're getting all this stuff jumbled up all in the same area. And hopefully what will happen is we'll get some kind of consolidation zone like this. This is a huge consolidation zone, and not necessarily one that I would want initially, but it's reasonable. And what we're going to get is a breakout eventually from outside this consolidation zone. And that's going to be the next big leg of whatever happens in the British pound US dollar. It's near the end of the year, and it's an active time of the year. And it's definitely possible that we're going to see this currency pair go all the way back up to 7,000 or all the way down to 6,000. Absolutely. One way or the other, that is most likely what's going to happen. We're going to see a pretty significant move. It can take people off guard because they could be on vacation during the time that move occurs. But if you're watching for a breakout outside of this consolidation zone, you're not going to be caught off guard like everyone else. I don't have, on the 1 hour chart, a huge opinion, But I do, for those of you that are watching this pound dollar with me, I do on the daily. This currency pair has been away from the 800 simple moving average on the daily for 1,173 bars. That is extraordinarily distant. It's been away for too long. It will take, if it gets back to the 800 simple moving average, it will take this currency pair weeks. It's not measured in days. It's measured in weeks. It's not even measured in weeks. It's measured in months. I mean, it could take 2 or 3 months to get back up there, but it is very likely that it will get back up there. I would suspect that 2 months from now, we'll find ourselves at the 800 simple moving average on the pound dollar on the daily chart. I'm just writing down a note that I said this, because if I said it, I want to be able to remember it. I'm sure Boyke will remind me if I've said something too. All right. Let's look at something completely ridiculous. Why don't we? Why don't we look at something completely ridiculous, like the US dollar, Canadian dollar? Let's go through start to finish maybe and check out what I think could be the big story of 2010. I think that the Canadian dollar has been somewhat of a story. I think when you look back on 2009, the big story will be the Aussie and the New Zealand, the big recoveries in those currencies and the interest rate hikes from their central banks, that they regained a lot of lost ground. I talked about it at the beginning of last year. It doesn't really matter. It's not really that big of a deal that I talked about it before. But I'm just saying that I'm beginning to get the sense that oil and Middle Eastern politics will be, center stage next year. I wouldn't be shocked to see a rebound in the price of oil. I wouldn't be shocked to see even a massive decline in the price of oil. But I think we've been trading in a range for a while here, and I think that we're ready for breakouts, and I think we're ready for some movement anyway. Anyway, on the daily chart here, we're very close to the 800 simple moving average. On the 4-hour chart, it's been 988 candles since we were last at the 800 simple moving average. And as you can see, this currency pair has just been basically meandering along sideways for what seems like ever. And that's the consolidation zone that I'm focusing on. I'd say above the 200 simple moving average, we ought to see this currency pair go all the way to the top of the range and maybe even to the 800 simple moving average. As you can see, every time that on the 4-hour chart the dollar Canadian crossed the borderline recently of the 200, it went at least 30 to 40 to 50 points. Once it goes that far, you can get your stop loss moved to break even and try for more. It's not about whether it can go a zillion miles. It's about whether the 200 simple moving average is really any type of significant barrier at all. And I think that it is. And I think once it crosses that barrier and closes on one side or the other, it's likely that we're going to see not only 40 to 50 pips of movement, but we could see 100 or 200 or 300 pips of movement on this next crossover. So the next currency pair that I'm interested in is the US dollar Canadian dollar. I'd love to buy this currency pair on a close above 1.0579 for right now, the 200 simple moving average, and target at least initially 50, 60 points, move my stop loss to break even, and then target the top of that trading range at the top of the box. What if it falls? What if it falls and crosses below 1.0400 again? I think it's going to go to 1 if it does that. I think it'd be very hard to catch this if it breaks this consolidation zone. We've been down close to that before, and that was back in October, and I think that we would start that whole process off all over again if we broke that range. Other currency pairs? That anybody wants to look at? I don't think I have the dollar. Oh, I do. I have the South African rand. I'd be happy to look at it, Boyke. Once and for all, we're going to look at the South African rand. Okay. It'll take a minute to load this sucker. Just give it a moment to fire it up. Yeah, this is absolutely thrilling. Clean out liquidity pools. That's funny. Well, I'm trying to bring up the South African Rand here, and nothing going. I don't even see any boss leader style trades or 1 hour. This spread on this thing is ridiculous. Trying to buy time, ain't that true? I mean, look at the 4 hour South African Rand. It's like the currency pair that time forgot. It goes off into this area and it just disappears. It's like we've erased that from our memory. May we never speak of this time again. The 200 simple moving average was going through a really difficult time back then. All right, let's look at something normal like the Australian dollar. All right. This one is interesting to me. I like this Australian dollar, US dollar stuff. I like the thought that this currency pair has now played out its happy moment. It's gone. It's just gone and gone and gone upwards over the course of the year. I would not be surprised to see this currency pair, if it falls below 89 even, below this red horizontal line, the support level, I would not be surprised to see it very quickly fall 300 points down to the 800 simple moving average on the 4 hour chart. If you want to look at something much more shorter term on the Australian dollar, we are fast approaching an overbought level on the oscillator on this currency pair on the 5-minute chart. We're at 381 bars and we want to get to 500 bars. And I think that if we get to 500 bars, then we're definitely looking at a situation where we would want to sell the currency pair and ride it down to the 800 simple moving average. That is awesome, Chris, that you're charting gold on the 30-minute. I can't wait to take a look at gold today. I'm really very much looking forward to that. So today we've looked at the euro dollar, the dollar yen, the euro yen, the pound dollar, the Australian dollar, Japanese yen, and that's pretty much what we've been looking at so far. My trade that I have on right now is the dollar yen. I'm long already, and I'm going to stay long, and I'm going to try to get to the 800 simple moving average. The euro yen is the other currency pair that I'm going to consider trading. Abel, I don't have a gold chart on this version of MetaTrader. Chris might be able to direct me to a version of MetaTrader that I can download that has gold on it. And FX Pro. Okay. That means I'll be downloading MetaTrader for the third time onto my platform, but that's perfectly fine. Okay, great. Well, I'll get that ready. I think that's perfect. That sounds really good. I can't wait to do that. FX Pro. And then I'll look at gold and some other stuff on those charts. Perfect. All right, folks, that's my webinar for Wednesday, December 2nd, 2009. I'm glad that you were here. Look forward to joining you next week. I will be here next week and the week after and the week after that 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 and the week after that. Can't wait to spend time with you next week again. Thanks for being here. Let me know how your trading's going. Remember, if you want an update on the trades that we've talked about here, go to robbooker.com/postcards. It's free, and we'll try to keep you updated on the trades that we've talked about right here. Thank you, everyone. Thanks, Maud. Thanks, Vicky. Thanks, Addenda.